So in this video, I want to walk you through a scalping trade that I'm currently in, which I'm going to close out more than likely today. I want to walk you through the analysis of why I placed the trade, the indicators I used, the logic I placed, and then what we'll do, we'll head over to my mobile, we'll see what the P&L is looking like and see whether we're going to decide to close the trade or not. So yesterday, August the 11th, I sold a naked call on Tesla expiring August 15th, so a 4-day trade expiring at the $365 strike. Now, for that, I achieved or collected $160 of premium. So on a 4-day trade, $160, which I think the margin was about 3-4 grand, is a pretty decent return for 4 days. Now, again, if you've got a smaller account and you want to take the logic that I've done in terms of the indicators and all these good things, which we'll go through, you can just buy the 370 call, for example, and turn it into a credit spread, which will be less premium, but it's less risk. And therefore, for a smaller account, you can trade bigger stocks like Tesla. So this is the trade I put on. And let's now go through the reasons why I decided to put on this trade. So this is a screenshot that I took shortly after of what I was seeing on Tesla's charts. And then we'll skip over to the live current Tesla chart and see how this has evolved over time. So again, I took this yesterday and I was liking what I was seeing. So at the top here, we got the strike price at 365. And again, this is a 15-minute chart. And what we've got firstly is that the RSI was overbought. So you can see here on the day it popped up and the RSI popped up as well, getting into overbought territory. And because it did that, what it did is it extended the Bollinger Band. So you can see as the price jumps, the Bollinger Bands contract or expand rather, and then will hopefully end up contracting. We can see here, for those who love watching my channel, you guys know I'm obsessed with daily pivots, weekly, monthly pivots, all the pivot points around there. And you can see here that we have where the day hadn't finished, but I can tell you it was a missed daily pivot. So what that basically means is that Tesla did not hit its current pivot level for the day. And what that generally ends up meaning is that over the next few days, it doesn't have to happen, but happens majority of the time. Price likes to tend to gravitate back towards its pivot level. So again, we've got a missed pivot over here, which was 2 days ago, but this pivot was here, this was here, this was here. You can see here now, as this pivot was missed, you can see price jumped up and clipped. You can see that wick there, getting to that pivot point and came back down and eventually passed it through anyway. So this is what I mean by missed daily pivot levels. Again, you can use to scalp trades in and out of positions by doing that. What gave me some more confirmation is also the price was below its weekly pivot. So when it jumped up on Monday, the weekly pivot's down here. We have a missed daily pivot. We are overbought here, overextended on the Bollinger Band. All these good things, you can see here that price will hopefully come back down and at least touch its weekly pivot within the given week. Not to say it can't go up and then eventually go back down, or it doesn't even have to get to these levels. But with all of these indicators and confluence on your side, it felt like a good trade, a good risk to reward. Again, people will say that, oh, what if it blows the 365 strike? Tesla can go to 800, 900, etc. But again, I'm confident in my options ability to roll the option. Again, like I said, it sometimes happens, doesn't all the time happen where I get a position into trouble. And again, if that does happen, I can go shoot a video on it and what to do. And when you see where we are now, you can see that we're inside a good spot. So that's the logic. I like to use overbought, oversold indicators mixed with missed pivots and weekly pivots and all these good things, and to kind of predict where I think the price is going to go. You got to also remember as well that even if the price does go up, I still have got buffer room at 342 to 365. So whatever that is, let's call it 365 minus, let's call it 343. So that's 22 divided by 342. Tesla still has to move up 6% in the next 4 days, which for Tesla, that's not really a big move. But I believe that giving myself some time or time and space between the current price and the strike price will hopefully allow me to get out of this trade at a scratch or a small profit before Friday. So that's the logic of what I did. So now let's bring over the current live Tesla chart for August the 12th, currently where we are today. So it was around this area here where the last screenshot was taken. And what you can see here, it didn't get down to its missed daily pivot, which ended up being a missed daily pivot. However, the price did go down, and now we can see that it's hit its current daily pivot, and now it's using as a form of resistance. So the move gone in the direction that we want. It hasn't got to these levels yet, which is fine. So therefore helping us with our 365. And again, the reason why I like options is because now the theta, which is an option Greek, which is the decay in that time value. So that $160 I created is all what's called extrinsic value or time value. So that's going to end up going to zero as long as Tesla stays below $365. So again, what this means is that because time is working inside our favor and also the price has gone down, that 160 option that I sold is now less than $160. So I can buy it back and then keep the difference, which will be my realized P&L. So what we're going to do now is we're going to head over to my mobile. We're going to see what that position is looking like, and let's close it out if we've got a decent amount of profit. And where I'm looking to kind of close out is around 50% of the 160 that I received. So we're here in my trading account where you can see at the top, we've got the Tesla August 15 365 call that we sold. And you can see now that the unrealized P&L is plus $109, and the average price or cost basis is 159, 158.95. So the 160 that we sold, there was $1 or so commission there. So therefore, the cost basis of this position is 158. And we've already made $108, which is about what, 70 odd percent of the position in just over 24 hours. So there's only $50 left, and there's no point me holding the position all the way to expiration for that $50. So what we're going to do now is I've decided, because I've made the $107, which is 70% of the position, there's no point me holding it for an additional $50 and have all that risk on the table. So let's close this trade out. So we got filled at a debit of $51. So it's just over $110 that was made on the trade, which is absolutely fantastic. And again, this is how we trade these positions. So if you're interested in learning more, you can sign up to my coaching plan or check out the 111 trading strategy, or this video on the top corner here to learn more about how we trade the 111 strategy.